sometimes we go back and forth. I went.
You weren't first last week. Well, no,
Yeah.
I was non-existent last week, so you went first, second, and last.
So yeah, now this time you're just because you were non-existent last week, we're gonna make you go. That's your
Okay.
consequence.
Okay. That works.
So and with that, hey everybody, welcome to our recap. Peter's here. Our missing in action. Peter is back this week. My partner, Prophet. We're back with another weekly recap. Everything we're saying is, of course, for educational, informational purposes only. So Peter's going to go talk about his thoughts. You can even cover the market, Peter. This week, I'll actually shut up and let you cover it first. And then if we have time, we might actually make some trades live for you. So with that, let me go ahead and give the floor over to Peter.
Okay, thanks, Travis. All right, so welcome. Sorry, you guys. So Travis won't tell you this, so I will. So our schedules were, I was driving back, or we were all over the place. So we were just going to record our own, and I don't know, for the last week or so now, I just totally misunderstood what we were doing. So I was going to send him my recording on Wednesday for some reason. Why would I do that when we always do it on Tuesday? So he texted me. He's like, hey, is everything okay? I didn't get your recording. I'm like, I was going to do that tonight. So that's why I wasn't around last week. So I was a delinquent. So sorry, everyone, for missing that. And Travis was showing up like he should and like I should. So with that being said, how do you guys like the market? Is it ticking you off? But Travis did he showed it last week, and it was perfect watching his recap. Hopefully you guys gained as much value as I gained out of it, because you can clearly see this thing is in a channel. I just have a 9-month chart. If you look a little bit longer chart, you can really see that channel. And it's not really going anywhere. It's probably just going to keep bouncing back and forth. And until, basically, one of the things to look at when you see something, a stock or even the market in a channel, just wait for it to break out of one of those support or resistances, and that's generally the direction it will take off to. So the easiest thing to do, if you don't have a lot of patience or a lot of skill in trading in a channel, then just don't trade. Just sit in cash. You won't lose any money. Don't listen to the Peter Schiffs of the world that are going to tell you that your fiat money is losing value, and they want to sell you a program in which they're going to take your fiat money for their program. So don't buy into that stuff. Just sit in cash and wait for the market to either break through support at the bottom or resistance at the top, and that's usually a very good indication. And don't wait for just one day. We always say one day does not make a how do we say it? One day does not make
a trend. One down day does not make a trend.
I couldn't think of the word. Damn.
Yeah.
I'm gonna have Alzheimer's. One day does not make a trend. You got to give it a couple days of follow through to see where it's going, and you can clearly see that. Last week, I think President Trump combed his hair the wrong way, so the market fell, and then he combed it the way they wanted to, and now it's going back up, because the media will give you all kinds of stuff as to why the market's fallen, and they'll always blame President Trump or someone else when it's fallen, and they'll always say, look at how smart I was to tell you to get into it when it goes up. So bottom line is, we don't know what the market's going to do. We'll just have to wait and see. We did recap this a couple weeks ago, though. October, Travis talked about it. I don't like to trade in October, and for good reason. Travis pointed out, he's like, yeah, because generally market crashes come in October. You can usually see that if you go back to market, our last bear markets, and we're wondering when the next one's going to come. Who knows? Maybe it's already coming. We just didn't see it. But so that's basically my take on the general market right now. I have no idea what it's going to do, because I don't think the market knows what it's going to do. Today looks like it's a semi-flat day. Was a little bit down, it was a lot bit down, and then a little bit up, and now it's a little bit up, I guess. It's a little positive, but nothing huge in the way of volume to say it's going to go either way. So just stay put. I am out of all my trades with the exception of things that I own. Obviously, I have some covered calls and stuff, but all my credit spreads, I am happy to say I got out of every one of them for a loss. And then I traded a bearish credit spread to try and take advantage of that fall, and I lost money there too. So, so I can say I'm 100% successful at losing money this month because I was.
Oh
The good
gosh.
news is I am still up for the year. I'm just not as up as much as my goals. As a matter of fact, my remember I talked about my 3 goals. I'm at the goal that I is the easiest to hit that I don't want to hit. I'm at that goal for the year. So, and that's really comes down to just due diligence. It has nothing to do with the market. It has to do with me and I've been lazy. I haven't placed a lot of trades, and when I did, sometimes I placed them at the wrong time. So, but that's pretty much it. Do you want me to cover what I was going to do, Travis?
Yeah, go for it. The trade you're
Okay.
talking about?
Yeah.
I mean, we haven't placed trades live in a long time, so yeah, it'd be a good refresher.
So one of the things that when the market fluctuates the way it does, it gets you antsy. I'm sure I'm not the only one. And as much as I've tried to work really hard on my patience, it's hard sometimes, especially when it does things and you're in a trade and you know you're losing money. No one likes to lose money, even though I knew it was less than 1% of my account. No one likes to give away money, right? Or lose money. So one of the things Travis talked about last week, I'm actually going to do it in my paper trading account. You can see I'm going to do it on SPY. I already did it on AT&T, but I'll show you how to do it on SPY. This is one of the things that we do when we own a stock. You can see here I own 500 shares of SPY. The good news was I bought this. This was one of our Buffett type strategies that we did, and I ended up getting assigned at 273. So that's a fantastic value right now, right? I could turn around and sell this thing if I wanted to. I'm not going to, obviously, because I am going to keep the shares. That's the goal, keep the shares. And I'm going to rent my shares out. So I'll show you how we do this, but I'm going to use Travis's new thing and test this out because it's really a kind of set it and forget it kind of thing to do, but I'm only going to go a year out. I'll just go a year out.
Okay, I thought you talked about the other one. I was like, don't show that yet. It's unproven.
Oh, no. This is just selling a
the
covered
other one.
call.
Okay.
Yeah, this would be, so typically if I were going to rent out my shares like on a monthly basis, with the stock market in its little channel there, I'd come out to probably this 13 November. I would stay away from that weekly. I'll go to this 15 November here, and I would sell an out of the money covered call in this case because the stock market doesn't know what it's going to do. So I would pick the strike based on my chart. I'd do a few calculations of where I thought the stock could possibly go to, and then place it out of the money from that point. So I'll just kind of spitball here. Let's say I really don't anticipate the stock market between now and the 15th of November getting above $302. I could turn around and sell 5 covered calls here, or what I could do is I could sell 2 on here, and this would generate $302, right? And let me just get out of that. And then I could sell another 2 the next month. This is kind of like our just kind of targeting a point, and I could sell 2 more, but I might go a little bit farther out in this one because in 2 months or 73 days, it's a good chance it could get to that 300, right? I don't want to lose my shares. So maybe I'll do the 305 somewhere in the same time frame. And I'm going to generate about $500 or $600, right? Over those 2 months, which is great. I think that's great. If you guys don't think that's great, I'll give you my address. You can send me $500 or $600 every 2 months. But instead, let's do something a little bit easier. Travis talked about this, so I'm going to do it. It's a paper trading platform, and so I can test out this theory. I'm just going to take a year long, and I'm going to trade an at-the-money covered call. I don't really care about this open interest because this is really a set it and forget it. And the reason why it's a set it and forget it is because if I get called away, I make money. If I don't get called away, I make money. Actually, if I get called away, I make more money, right? But if I don't get called away, I just do it again the next year. So we're going to go ahead and sell 5 contracts because that's what we own, 500 shares. We'll sell 5 contracts. I come in here and it's going to generate $10,250. Make sure I did that right. I always got to double check it. Sell 5 SPY. Yep, And we'll go ahead and send it out. It may take a while for it to sell because there is no open interest over there. So we'll see what happens. But if I need to, I can come back and adjust that price if it doesn't send it. That's it.
While you're moving that over, can I go ahead and talk through what you did?
Yeah.
Because I want to give people an analogy. The reason we call it, and then I'll take over screen after Peter finishes. The reason we call it, or at least I call it, renting out your stock shares versus the geek speaks or cover calls, because I want people to understand the strategies better, right? And think about a vacation rental. Or forget a vacation rental, an apartment. If you've ever rented an apartment, sometimes you have two options. You could do a yearly lease, or you could do a month lease. Anybody who's ever rented an apartment knows the month leases are always more expensive, right? When you lock in a yearly lease, your rent is always lower. Why is that? Well, because month to month is riskier for the house or apartment owner because there's no guarantee you'll stay there. They don't have guaranteed income for a year. They're like, at least I have a guaranteed next month's income, right? And if you leave, then guess what? They have to clean their apartment. They have to find a new tenant. They have a lot of expenses. And so they pass that risk on to you in the form of higher rent. All right, let's compare that to covered calls. Why I don't say covered calls versus renting out your stock shares, because guess what? When you rent out your stock shares each month, you will make more money than renting out your stock shares once a year like Peter just did. So if you sell a covered call, i.e. once a month, you'll get about 1% to 2% a month, 24% a year. When you sell a yearly covered call, you might make 6%, 8%. And it's no different than an apartment. If you lock in a year lease, your rent is going to be cheaper. Why? Because the apartment complex has it. They are guaranteed a year's worth of rent from you. So they know exactly how much they're going to make that year. So it's lower risk for them. And so it's a trade-off. So it's lower risk for them, and they pass that lower risk on to you in the form of lower rent. Was that did that analogy come through clearly, Peter?
Yeah, absolutely.
So that's why I always say renting out stock shares. I try to compare it to what we do in real life because it's honestly no different. All right, yeah, you'll make more money with the month-to-month leases, renting out your stock shares, but it's a little bit, I guess riskier in a sense that you don't know where the stock is going to be. It could fall, it could crash, and you're going to have trouble renting out your stock shares. But you do a year out, you don't care what the stock does. You get a pretty fat premium, and you're guaranteed you don't have to give that back. So if the stock crashes in a year, oh well, I got $2,000 I don't have to give back. If it goes up in price, oh well, I don't care. I got $2,000 I don't have to give back. So there's pros and cons. Everybody's different. So with that, can I go ahead and take over the screen now?
Yeah.
All right, so I will take over the screen now. Before I show you my screen, I want to talk through what I've been up to, and kind of I always try to have an interesting fact. I had something written down for last time, but I don't want to share that. I'll maybe share that some other time. But the reason I released the recap last week, not because I was being a jerk, because I could have waited one more day for Peter to record his segment and then release it late. But I'm trying to commit to, one, I'm trying to commit, two, I'm trying to commit to aligning my life with the way the world works. So when Peter is like, hey, I was going to do it tonight, I'm like, I am trying to align my life with commitment. The reason people are successful, the reason we can talk about Oprah and the Tony Robbins and the Buddhas and the Mahatma Gandhis of the world is because they were committed. They didn't allow stuff to get in the way of their mission. And so I'm like, it seems cold and heartless at times, but I'm like, but that's how they made such an impact on the world. It's because they were committed. The reason we can live in such an awesome world is because the world is committed to operating on its own. Like the sun is committed to coming up every single day. And because of that, like we can get all these seasons and we can benefit from the commitment of nature, right? So I'm trying to align my life with that. My 46-year-old brother just had a stroke, right? And so I'm flying home, I'm missing trades I was supposed to make. And so I was like, am I going to allow this very unfortunate situation derail me from my ultimate goal of, helping others commit financial freedom and things like that? And again, it seems cold and heartless. I'm like, no, I cannot become the successful person I want unless I commit. And I have to find a way to still be there for my family, but still being committed to my mission. And so that's why I recorded the recap anyway. We couldn't sync up our schedules because I was on my flight back home, and I was still going to have the recap. I was just going to find a little corner in the airport and huddle up and have the recap. Again, staying committed, even though it's crazy. We're flying, my flight was loading, but I couldn't find a quiet space in the airport. And it just happened to work out that Peter is driving so he could do the recap. But even still, that's why I was like, even with my brother having a stroke and all this other stuff is going on, it makes life a little bit more difficult for me for various reasons, emotionally and practically. I was like, I have to stay committed. And so that's why I released a recap, because I was like, I had a lot of stuff going and attacking me all at once. And I was like, I can't drown in the drama of life. I have to stay committed to the mission. So let me shut up. Was that clear?
Yeah, basically, you overcame huge adversity, and I was just a moron and forgot.
No, see how you just totally your negative interpretation of what I said.
No, that was right on point.
Oh my gosh. Anyway, with that, let me move on. Let me show you my screen here. All right, screen number 2. Something else I can say. I totally forgot now. You made me forget what I was going to say. Last thing I'll say about that is the reason I'm sharing all this. One, my wife thinks you all benefit from this. She's like, I don't know. She's on the outside. She's not living it with me, so she's not living the stress I'm living. But she's like, that'd be awesome in real time. They can see how you work through all this versus writing a book and 5 years ago, I got a divorce and here's how I worked through it. She was like, it's almost like a soap opera. They can see you in real time and what you're dealing with and then how you work through it. And I was like, whatever. I was like, it sounds cool because you're not going through it. But I was like, okay, that is one thing I love about the Success Academy. I love about our program is because I look at all these successful people I model, but they don't talk about their marriages that much. They don't talk about how to deal with family relationships. Their lives always seem perfect. I'm like, is their family getting ravaged by cancer like mine? I don't know how they handle life, right? Conflict with siblings, right? How do they handle that? They don't talk about anything. They just talk about trading. Oh, I am the world's most successful trader and blah, blah. I'm like, yeah, but I want to know, how are you managing that with marriage, and kids and all other stuff? So that's why I try to be transparent to let you know, hey, my wife said she was going to leave me 2 years ago, here's how we work through that. And here's how I still managed to show up with trading without losing my mind, right? We're fine now, I'll talk about that one day and the reasons why and all that. But we're fine now, and now I can't keep her little grubby paws off me. I'm like, oh, and I always have to say something smart like, oh, now you like me. I was like, oh, a few years ago you wanted to leave me now, right? But anyway, I always give her a hard time about that. But let me shut up. I've talked enough about personal stuff, but I just wanted to say that I'm always going to be as transparent as I can. I'm not going to reveal full details about everything because I'm still kind of a private person. But I want to show you that, hey, I have life. I deal with stuff, and I want to show you how do you deal with the unfortunate aspects of life. Life is not always, sunshine and rainbows. How do you deal with the tragedies in life, but still stay committed to being a better version of yourself and, increasing your wealth every year. So I try to show that. Now, with that, let me talk about the trade I want to make today. This is a speculative trade. I haven't placed a trade live. And the reason I'm making a speculative trade is because we can look here at my 2 accounts, trading for a living account, also called the One Stock Blueprint, showing people how to manage a larger account. This account, you don't contribute anything. It's a passive income blueprint. Those are your trades, Peter?
Yeah, those are my AT&T ones.
Oh, yeah, I'm glad I heard that because I want to talk about my trades too. So anyway, this account, it shows I'm up 90% for the year, but this is not accurate because I still have open trades that have a risk of losing money if the market doesn't recover. But my book profit, that's profit the market can't take away from me, is 42%. Those are trades I've already closed out. So if the market keeps going up, you're going to see I'm going to make another extra 50%, give or take, by the end of the year. So it looks like I have a lot of risk out, but they're not. They're low risk trades. I brought in 2 grand. The most I can lose is like 200. And so I love those that's what I call billionaire math. It's called asymmetrical risk reward. You risk $200 to make 2,000. That's how you get rich doing that. So, and then the premier case study, the 5-year retirement plan, the 5 years of financial freedom plan, that is showing up 124%, is broken out between contributions and investment return. I broke it out this year so people could see that 100% is not just trading performance. 88% of it is, and 37 is money I add to the account, because that's the path we follow. There is no wealth without savings. There certainly isn't any wealth if you're in massive consumer debt. But don't let me get on that spiel, because I'll go off on that. But for this account, the book profit is 59%. Now, with that, that's why, that goes back. That's why I can afford to make a speculative trade now, because I'm good. No matter what happens from between now and the end of the year, most likely I'll hit my 60% target for the year. So now I can breathe a little bit. Now I can do fun stuff like this where I'm antsy, I'm sitting on my hands, I can make speculative trades. So what I'm going to do is play this pattern I talked about last week, right? This between support and resistance. The market is right in between support and resistance. I am speculating, we don't know, and the market doesn't care what I think. I'm speculating this pattern is going to hold and that the stock is going to stay within this pattern. So I'm going to sell a bullish cash flow trade, a bullish credit spread, makes money if the market goes up a little bit or stays where it's at. So I'm going to look to place an out of the money one. I'm going to kind of stay right here around this price area right here of support. So that's what I'm looking to do. And so I've been talking long enough. I won't place that live. I'm just letting you all know now that's what I'm going to do. And so our next recap, you can see, hey, did this work out like Travis talked about, or did he lose money? So I'm going to place a trade so that if the market continues this pattern right here, I will bring in income, but I will ensure that the most I can lose is a profit I just recently made. So with that, I am done with my recap.
And I apologize, I wasn't paying attention, but what I was trying to do before we got off was just kind of show, so that trade I placed, it did fine. I had to readjust it. I couldn't place the one I wanted to because there was no open interest, no volume, so it just wasn't placing. So I ended up, this is kind of the benefit when you own the stock at a lower price point than where it's trading at, and this is why the Buffett strategy is so nice. And if you have the patience, this is what you can do later on when you utilize the Buffett strategy. And this is what Warren Buffett does. When you showed that a long time ago, Travis, this is basically what he does. He's a billionaire because he has a lot of patience and he follows his plan. So basically my trade brought in $10,585. Now just in all, yeah, that's a lot of money. Now, just so everyone knows, that's based off 500 shares of SPY that I paid $273 for. So that's $136,500. That's what that cost of that initial investment was. And for that year-long trade, whether it exercises or not, right now I just basically made 7.7% on my money in a year. Right. So, and then the only other thing I was going to do, 146.5. Let me just do something real quick. Bear with me.
And while he's calculating, people, that 10 grand is his to keep. The way we trade, we don't give it back.
If I purchased SPY at the 293 that it's at,
sell it.
That would have, huh?
You mean sell it?
So let's say my purchase price was 293, not 273. Okay. That would represent $146,500, which would be a 7.2% return.
Okay.
So just to kind of give you guys an example of, and I know not everyone, like if I were watching this video when I first started out, I'd be like, yeah, great, I don't have $150,000. And if you don't, that's your goal. That's, if you look at it, that's, Travis and I were talking about this off camera a while ago, I think a couple of weeks ago, where we were talking about systems. Travis always talks about these systems, and the goal really for me is to have many, many easy little systems that generate income.
Mhm.
Each of those systems doesn't have to generate $25,000 a month.
No.
If each of those systems generates a couple hundred, $300-$400 a month, and you have 10 or 15 of them, well, guess what? You're making some pretty good cha-ching. So just that's something you can use as your goal, because you know what? You can, over the next 10 years, if you do your due diligence and follow, if you join a system like ours, like the Success Academy, which I don't know, is it still open?
Until we hang up, and I'm going to close it, and it's closed for at least for the next couple of years, probably.
Right. So you'll have options to other systems that Travis will be putting out. It's not like you will never have the option to the Success Academy. You just won't have the same options that we used to give, but you'll still have options. And the point is just find the right thing that clicks. If you like what you see in our videos, then keep track. You should be hooked into Travis's network. That's what you do. You hook into networks of people that you like. That's how I got involved with Travis. I hooked into his network, and he was someone I enjoyed following. I watched his videos. I know it sounds like a sales pitch. And you know what? It kind of is, because I wholeheartedly believe in this system. The one thing, we were talking about this too, we don't sell you something we're not using.
You pretty much, yeah.
There's a lot of other things I've gotten involved with, and you come to find out it's like, there's no way you're using the system you just sold me, because I have not been able to make a dime in your system. And I followed it verbatim, and you can't figure out why I can't make the money. So the bottom line is, all our students that have come to us saying, hey, we're having trouble making money in your system, we've coached them and they make money. So that's why I believe so wholeheartedly in your program, because it's this program I use and I make money in it. I showed you on paper, that's something I can do in real money. So it's not like I couldn't do that in real money. It's not like I don't do that in real money. The reason I did that trade in paper is because it's a new technique, and I wanted to try it out. The hardest part about that trade, and I'm sorry, I know I'm going on too long, Travis, but the hardest part about that trade is patience. Well, I have the patience to just let it run and know that I made 7.7% off my money. So,
a guaranteed 7.7%.
Guaranteed, right.
Yep. If Peter doesn't show up anymore this year, if he just sleeps in every day, never looks at the market again, he still makes a guaranteed 7.7. It's called passive income, multiple streams of income. That's what we're about.
With that, I'm going to shut up.
Yeah,
sorry.
Same here. I was like, that's a good point. We believe in multiple streams of income. We believe in multiple streams of passive income. And I'll say one thing. Passive income is technically a lie. It's what I called it a long time ago to Peter. I said multiple streams of low maintenance
income. I'm sorry.
Passive income is a cute buzzword, but don't buy into it too much. And the reason why is it doesn't align with the realities of life. If you passively manage your relationship or your marriage, what's going to happen? You're going to grow apart.
Right.
Yeah. Try to passively love your spouse. Yeah. See what happens, right? Yeah. Not going to work.
I haven't seen my wife in 6 months.
Exactly. Right. So, but it doesn't always have to be intense. Like, oh, I got to show up every single day. No, just low maintenance. You put a system in place, you check in on it. Right. Because if you truly try to do passive, you're going to wind up losing all your money. You're going to wind up losing your marriage. So multiple streams of low maintenance income, also called passive income, but the reality is not really passive. So anyway, with that, hey, this recap, I don't know how long we've talked, probably a little bit longer, but I hope you all found some great value in it. Peter's trying to make up for the fact that he missed last week, so he's talking more today. So, hey, I'll take care. We'll see you next week. All right. Bye-bye.